Okay, let's picture this. Ramesh, over in India, checks his HDFC bank account, and bam, there's a 600 penalty. Why? His savings balance dipped below the 10,000 minimum.
Right.
Now think about Ahmed in Saudi Arabia. He's using Al Rashi Bank. Maybe his balance fluctuates too, but he's probably not losing sleep over minimum balance penalties.
Probably not. It's a really different experience.
Exactly. And that difference is what we're diving into today. We've got some material here comparing these minimum balance rules and the penalties in Indian and Saudi Arabian banking.
Yeah, it's quite the contrast when you put them side by side.
Our mission really is to unpack these different ways of doing things and figure out what it actually means for folks managing their money in these two countries. A quick but hopefully insightful look for you.
Well, the first thing that jumps out based on the sources is just the basic policy approach. In India, it seems quite common, especially with banks like HDFC, ICICI, for them to have these specific minimum monthly average balance rules.
Average balance rate, not just dipping below for a day.
Exactly. And if you don't meet that average, like Ramesh, penalties are, well, pretty much expected for many standard accounts.
So you sign up, and there's this number you've got to keep in mind constantly. But then you look at the material on Saudi Arabia, Al Rashi being an example. It suggests a different focus, more on customer convenience.
That seems to be the gist of it. The policies there often appear more flexible about needing to keep a specific high balance locked in. It just feels less strict overall.
Okay, and that philosophy difference, it directly impacts the penalties, right?
Absolutely. Like Ramesh's 600 charge shows, and the sources confirm, Indian banks can levy penalties anywhere from, say, 100 up to 600, sometimes even more, maybe a percentage of how much you're short.
Ouch. That can definitely sting, especially if money's tight.
It certainly adds up. But then the material suggests that in Saudi Arabia, these kinds of penalties for falling below a minimum balance, they just generally don't seem to be a thing.
Really? Not at all.
It seems largely absent, much more of a customer-friendly approach in that specific regard. It does make you wonder why the systems are so different.
It does. And now hold on. India does have an option to avoid this, doesn't it? I think the sources mentioned something. BSBDAs.
Ah, yes. Good point. The basic savings bank deposit accounts, they are mentioned. These are designed specifically with zero minimum balance requirements.
Okay, so Ramesh could have potentially avoided that penalty if he'd had one of those accounts.
Precisely. They're meant for, financial inclusion, making basic banking accessible without that pressure.
Right.
But here's what's interesting. Comparing the bigger picture, the material suggests that in Saudi Arabia, even standard accounts often have minimal condition.
Minimal conditions.
Yeah.
So are you saying the kind of flexibility India offers through those special BSBDAs might just be standard over there?
It sort of leans that way, yes. It seems the baseline level of flexibility in Saudi banking might be higher across the board, effectively mirroring what BSBDAs offer in India, but perhaps more generally.
So the default setting is just different. In India, you often have to actively seek out a specific account type, like a BSBDA, to dodge those minimum balance fees. Whereas in Saudi Arabia, that ease of use seems more built in.
That sums it up nicely. The fundamental difference seems to be about priorities. India's system, at least for many common account types, appears to emphasize compliance via these balance rules and the penalties that back them up.
Like, keep this balance or pay a fee.
Pretty much. Whereas the Saudi approach seems tilted towards making banking, well, easier and less stressful for the customer by reducing those kinds of restrictions.
Okay, so let's bring it back to the individual. For someone just managing their day-to-day finances, what's the actual impact of these different approaches?
Oh, it's quite significant, I'd imagine. In India, the potential for penalties could mean extra financial stress, especially for people whose income or balance fluctuates. It might even discourage saving if you're worried about dipping below the threshold.
Yeah, I could see that, constantly watching that number.
Whereas in Saudi Arabia, not having that specific worry probably translates to, well, greater peace of mind, more financial flexibility perhaps, and definitely less stress about small temporary dips in your account balance.
Right, less chance of getting dinged by an unexpected fee just because your paycheck was a day late or you had an emergency expense.
Exactly.
So the key takeaway here seems clear. The way India and Saudi Arabia handle minimum balances and penalties creates a really distinct difference in the everyday banking experience for people like Ramesh and Ahmed.
That's the core of it. It directly impacts their financial lives.
And that leaves us, and you listening, with a final thought to chew on. What could be driving these differences? Are there underlying economic reasons, maybe cultural factors, that lead to such distinct banking philosophies in these two countries?
Hmm. It's definitely something interesting to consider as you navigate your own finances wherever you might be banking.